Good morning. There's a general truism when it comes to stock markets that they don't like uncertainty. And with tariffs, there's been a lot of uncertainty, not just will he, won't he, in terms of President Trump putting them on certain imports, but then also what the effects might be in the long run. That being said, we've got Paul Schatz, the founder and president of Heritage Capital LLC, who says all this stock market volatility we're seeing actually can be traced to a different root cause. Not that tariffs don't have anything to do with it, Paul, but what do you think is actually driving this market instability?
Good morning.
Good morning.
Although it's really easy to blame the stock market decline and economic uncertainty on tariffs. And we were chatting, I hate tariffs. I think it's among the single worst economic policies man ever invented. With that said, the stock market made its last all-time high February 19th. And the next day, Walmart, arguably the most important retailer in the country, said to the effect that the consumer is a little strapped. Walmart historically has never said that at an all-time high. That, to me, is the real reason for 90% of the stock market decline, is that Walmart, which is the retailer to all, announced the consumer may have a problem.
In a bellwether, essentially, if they're seeing problems, that means other places have seen problems.
And essentially what that means is all the economic data is a little bit stale. That's real-time data. That a company, right, exactly, that a really important retailer says. I know it's easy. Frankly, I think it's lazy, and people aren't doing their homework to say the stock market declines about tariffs. It's not, because the stocks have declined the most have absolutely nothing to do with tariffs.
Okay, so there's another side. Is there still an argument to be made? Okay, sometimes the White House is saying the tariffs will lower costs for the consumers. Other times they're saying it's more of a case of short-term pain for long-term gain. They want to try to protect American industries. They saw what happened with supply chains back in the COVID pandemic. Is it not necessarily a bad idea to try to keep some of that at home, keep some of the supply chain at home so we could weather another pandemic if the bird flu or something
That's a great idea. Let's have a domestic supply chain, right? Everybody says, buy American, rah, 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 around the flag. Here's the problem. People say it when it's this popular theme. When it comes to potentially higher costs in their wallet, they're like, well, everybody else should do that, but I'm going to go buy the goods out of Vietnam or out of China or wherever. Tariffs don't work. Here's why. Nobody wins a trade war. I tariff you, you tariff me. Now, Canada has 30 million people. We have 330 million people. They're going to lose. They'll be the bigger loser in the trade war than us. But we're still going to lose anyway. Any country that we're going to have this trade war with, the tit for tat, everybody loses.
You're saying it's not a zero-sum game. There's not a winner.
It's
a winner and a
absolutely
loser.
not. My solution, again, this is way above my pay grade. My solution is if you're part of the World Trade Organization, then you agree to have free trade agreements between countries, and you don't tariff anybody. No one should protect certain things. Labor flows around the world where it's treated worst. Money flows where it's treated best. And we have this disconnect right now.
Okay. Real quick, we got time for sort of one takeaway. So now that the markets are unstable, regardless of the root cause, what do we do with that information going forward?
Well, it's a couple things. So one, the economy is slowing. I sat here with you a month and a half ago. I said the economy is going to slow this year, no doubt about it. First quarter of the year, stock market's going to be down. We're going to have a rally. So if you're an investor, an equity investor, I would make sure I loved what I owned right now, but I certainly would put risk capital. I would invest in some stocks here. I would look for some bargains. I would not, this is not the end-all be-all buying opportunity for the next 5 years. This is a good opportunity for some months, some quarters, maybe a year, but I would not get over my skis. And also, look, if the economy is going to slow, finally, it's after 5 years, it's time to buy bonds.
Time to buy bonds. They've been fairly profitable before in the recent short term, and now is not a bad time, you're saying.
Economic slowing. Interest rates go down, bond prices go up, bond investors are really happy.
There you go. So definitely a different take there. Paul Schatz, thank you so much to give us that insight. Paul Schatz from Heritage Capital LLC. Keith.